Hello, good to see you again. So I want to add a couple more thoughts. This one's about the psychology of investment. We don't have a lot of time to delve right into the depths of the psychology and the makeup of the individual investor, but we do give hints to the learners about things to be aware of for themselves. I mentioned one earlier when I talked about your emotional attachment to businesses. You see a business, you have that brand loyalty to it. You might be a passionate Apple person. iPads, iPhones, Macs, etc., watches. Right? You might be a passionate Apple person and see the Apple stock and desperately want it, but maybe that's not the best investment. You might become emotionally engaged with that business and track their performance over time, and all of a sudden their performance starts to decline. But no, I've got to hold on to it because I'm emotionally invested in the business. There is a classic example in the TV sitcom Friends where one of the characters actually invests in a business solely because it has the same initials as her name. That is an emotional investment strategy. It is one that maybe not the best type of strategy, but it is one to be aware of. What is your appetite for risk? Do you want those high-flying, hair-based companies that go really quickly, grow really quickly, and have the equal chance of decreasing in value very quickly, or are you more a slow and steady wins the race kind of investor? It is an idea to build up what's called a risk profile of yourself, and investors will do that. In the past, there's also been a suggestion that there's been a gender difference with regards to risk profiles for stock market investors and stockbrokers, where male investors tend to be more risk takers and female investors tend to be more risk averse. So therefore different platforms and different approaches maybe with regards to how they choose to and what they choose to invest in. There are other strategies, other psychological effects. One of the big ones that we notice, particularly if there's what's called a run on the market, you can see the herd mentality happening, where one individual, maybe a significant one, will act in a certain way and the rest will all follow, like animals in a herd. It might be that there's been a tweet sent out that says this is going to happen, or this business is bad, or we want this to, and all of a sudden people will listen maybe to that and think, well, they must know something and act in that particular way. And similarly, in a business setting where you personally know something about the business or the industry, and you are able then to share through social media your information, your understanding, and other people follow you. You are the influencer of them. Well, in the stock market world, we have the same idea. You invest and you follow. So people like the George Soroses of the world, they are so big and famous with regards to their investments and the strategies that they employ that people will follow them. They pick a stock, everybody will follow. They choose to decrease their investment in a particular stock, everybody, well, what do they know? What do they know? Let's do it as well. And the herd behavior comes out as well with regards to that. So emotion, right, the brand loyalty idea, the psychology of herd, right, the herd psychology, your risk appetite, all of these things can and should be considered with regards to investment. One other thing that should be noted, and this is things that I tell the learners, is that there are other forms of investments. There are other strategies you can do. There are investments in real estate, which have proved over time to be very successful for a number of people. There are investments in bonds or government debt. There are investments that are commodity based in oils, golds, precious metals. All of these can also be added to a portfolio. Your portfolio may not also then be tied to just one stock market in one country. You could have investments in others and therefore diversify your market that way. One of my personal big rules for investing is not to borrow money to invest. There actually are a number of cases in history where people have borrowed large amounts of money to invest and it has gone badly. There are modern investment strategies and modern investment products that will actually allow you to borrow money to purposefully invest. And there are reasons why they would do that, and the risk with regards to that might be a little bit higher, so therefore maybe the return might be a little bit more. Okay? There are some individuals who will have currencies, different countries' currencies included in their portfolio. Again, it's the same basic idea. You are wanting to see a return on your investment, a percentage change, an increase perhaps. There are other investments. There's the cryptocurrency investment strategy, where people look at bitcoins, ether coins, right? All of the more quirky, right, modern types of assets. They're not necessarily ones I would always recommend, not at this stage. There isn't any oversight necessarily in them. There have been a number of cases of criminal activity involving them, and there are also suggestions that maybe the trading isn't as accurate as you'd think. Maybe some of the trades are actually fake in order to push the stock market price up. The psychology of investment tends to assume that businesses want their share prices to be high. So we do have some cases where businesses have actually bought their own shares in order to increase the value of those companies. One of the most famous cases is Enron, where the business wasn't, arguably successful, but it was also buying its own shares and encouraging its employees to buy its own shares in order to boost the share price and therefore the return for the investors. And as long as that share price kept going up, everybody thought Enron was doing very well. Turns out, like the emperor with their new clothes, Enron was not doing well. And as a result, the share price started to fall once people realized it, and it fell and it fell. The herd behavior gained steam and it collapsed as a business entirely, disappearing. And the directors were arrested for varying business practices that were illegal at the time, maybe still are, hopefully still are. And other situations, people lost their entire investments, people lost their pension schemes through it. There was a lot of those sorts of issues. And now with an interconnected world with regards to the global financial markets and how businesses connect with other businesses, one thing to be aware of is that if America sneezes, the rest of the world can catch the cold. So we can watch, because of the time periods that happen, we can watch things happening in America that then spread around the world. So we know what's going to happen. If this is happening in America at the moment, then it's going to have a spillover effect, perhaps, into other share markets around the world. So it encourages the learners to keep track of the news, to read business stories, to ask really important questions. What is happening? Why is that CEO left? What is the possible implication of that? Tesla have recently made a profit. Is that going to continue? What is the result of their making the profit? Well, their share price went up by over 20%. Is that going to continue? Is that sustainable? Jeff Bezos and his strategies for Amazon. They've recently restructured and changed some of their pricing policies for some of their particular products that they offer. There's more competition in the online streaming market. So the Disney versus the Netflix. So what will happen with those? Keeping track of the news, thinking in advance what those businesses will do. These are all really good strategies and things to consider with regards to investment. I hope you've enjoyed listening to me discuss investment here at Nexus. We have lots of opportunities for our learners, including CCAs like this, where we're interlinking the curriculum and the real world in a much more vibrant and real way for the learners. Have a great day. Thank you.